How the 2026 market crash could make you rich. Imagine waking up one morning in 2026 and realizing the world has just shifted under your feet. Stocks that were untouchable yesterday are suddenly falling like stones. Analysts who spent years chanting the bull market is unstoppable now look into cameras with trembling voices. And while millions panic, freeze, or desperately hit the sell button, you are surprisingly calm. Why? Because you understand something almost nobody else does. Wealth doesn't disappear during a market crash, it transfers. And when the world enters chaos, that transfer accelerates like nothing else. But before we dive into how you can be on the winning end of that transfer, let me ask you a question. What if the 2026 crash isn't a disaster, but the greatest wealth window you'll see in your lifetime? What if the next 18 months decide whether you fall behind or catapult ahead? Let us break down what's brewing beneath the surface and why the coming collapse might be the most predictable surprise in modern financial history. The setup nobody notices. Every bubble has a soundtrack. In the late 90s, it was the internet. In 2008, it was housing. In 2022, 2024, it was cheap money in tech. But in 2025, it's something much bigger, a cocktail of AI euphoria, debt addiction, geopolitical shocks, and investor amnesia. Right now, valuations are sitting at levels that make seasoned investors raise an eyebrow. The market isn't just optimistic, it's delirious. AI companies with no profits are worth more than industrial giants. Tiny startups are valued like global empires. Debt is piling up so fast that even central banks quietly admit they're running out of tools. The world is living on borrowed time and borrowed money. And yet, the average investor believes nothing can go wrong. It's different this time. It always is. Right before, it isn't. The first cracks have already appeared, you Dan. Need a PhD in economics to read the signs. Look around. Corporate earnings growth is slowing. Government borrowing is exploding. Households are maxing out credit cards at record speed. Supply chains remain fragile and overpriced. Central banks are stuck, cut rates and risk inflation, raise rates and risk collapse. Put simply, the system is stretched like a rubber band, and rubber bands always snap. That snap will be called the 2026 market crash. But here's the twist. While millions see disaster, the wealthy see a reset button. Why crashes create more millionaires than bull markets? This is a truth no school will teach you. People don't get rich in booms. They get rich in recessions and cash out in booms. Let me explain. During a crash, prices of great assets fall 20%, then 40%, then 60%. Fear takes control of the average investor. Quality companies get sold off with the garbage. Real estate gets dumped below its true value. Debt markets panic and misprice everything. And in that moment, when the charts bleed red and the headlines scream end of the economy, that is when the next generation of wealthy investors quietly step in. They buy the right companies. They buy the right real estate. They buy the right distressed assets. Not because they're smarter, but because they're prepared. Preparation, not prediction, creates wealth. How the rich really prepare for crashes. Here's the part most people don't know. Rich investors don't wait for the crash to react. They position months, sometimes years earlier. They do three things. 1. Identify what will fall the hardest. Overvalued tech companies surviving on hype. Businesses drowning in debt. Anything that looks shiny but has no real foundation. These will collapse fast and drag everything with them to build liquidity before the storm. You can't buy opportunities if you don't have cash. You can't take advantage of panic if you're part of the panic. While the crowd goes oolan, the wealthy save fuel. 3. Create a list of what they'll buy at crisis prices. They don't guess, they plan. They know the exact stocks, sectors, and assets they want, and at what discount they'll strike. It's like walking into a store knowing everything will soon be 50% off. Why 2026 could be your breakout year. Think of everything that could trigger the crash. A disappointing AI earnings season, rising debt, defaults, a credit market freeze, geopolitical shock, central banks making one wrong policy, mauvais sudden liquidity, shortage, over leveraged corporations collapsing. Any one of those is enough, all of them together. That's a financial earthquake. But here's the beauty. Every earthquake uncovers hidden treasure. The question is not, will there be a crash? The question is, will you be ready when it happens? Because when the storm hits and prices drop 30 to 60%, and the world panics, those who prepared will quietly plant seeds that could grow into fortunes. Picture this. It's early 2026. The markets stand a crash. In a single dramatic moment, they slide. Slowly, quietly, almost politely at first. A few disappointing earnings here. A surprise policy announcement there. A debt default headline buried on page 3 of the newspaper. Nothing dramatic enough to trigger panic, yet. But beneath the surface, something enormous is moving, like tectonic plates grinding before an earthquake. And then suddenly, the momentum flips. This is how every major crash begins, not with fireworks, but with whispers. And while the majority of investors are still hypnotized by AI to the moon narratives, you'll recognize the shift instantly. Because now, you know exactly what the early signs look like. Let us walk through exactly how the 2026 crash could unfold, and how someone prepared could turn the most terrifying moment of their life into the most profitable one. Hook the domino nobody sees falling. Every crisis starts with a single domino. Sometimes it's a tech giant missing earnings by 20%. Sometimes it's a major hedge fund blowing up. Sometimes it's a geopolitical spark that rattles global supply chains. But the big domino for 2026, it might be debt, corporate debt, government debt, household debt. Billions borrowed when interest rates were low, now coming due at rates 3x higher. All it takes is one company to default, one bank to tighten lending, one credit market to freeze, and the chain reaction begins. But here's the twist. While average investors see chaos, prepared investors see a once-in-a-decade clearance sale. The anatomy of the 2026 crash, step-by-step. Stage 1. The calm before the panic. The market begins dropping 1 to 2% per week. Nothing dramatic, but continuous. You'll hear phrases like healthy correction, profit-taking, short-term volatility. Meanwhile, institutional investors begin quietly moving to cash. Retail investors, they buy every dip, convinced the bull market is immortal. This is where the separation between future winners and future victims begins. Stage 2. The shock event. This is where the mask falls. Maybe a major AI company misses revenue projections by 25%. Maybe a debt-heavy conglomerate announces bankruptcy. Maybe inflation spikes unexpectedly and central banks react aggressively. Maybe a geopolitical conflict disrupts energy markets. Whatever the trigger, the effect is the same. Momentum reverses violently. Suddenly, tech stocks fall 20 to 30% in a week. High-yield bonds get dumped. ETFs bleed red. Liquidity evaporates. Volatility explodes. Financial news networks switch from market optimism to market crisis overnight. And this time, retail investors don't buy the dip. They run. Stage 3. The blind panic. This is the part most people remember. The screaming headlines. The charts that look like cliffs. The panic selling. The frenzied social media fear. Stocks fall another 30 to 40%. Some fall 60%. A few fall 80%. Good companies get punished just as harshly as bad ones. It's indiscriminate selling. Fear has taken full control. And this, right here, is where fortunes are built. Not after the panic, not before, but inside it. Because in that chaos, the strongest assets become wildly mispriced. This is where the millionaires are made here. The secret most investors never learn. The best buying opportunities happen when the price is right, but the fear is wrong. During the crash, quality companies become cheap. Blue-chip stocks trade at 2015 prices. Real estate in good areas gets sold by over-leveraged owners. Distressed debt offers 10 to 20% yields. ETFs drop lower than their intrinsic value. You don't need to be a genius. You don't need luck. All you need is a list of assets you researched before the crash, the liquidity to actually buy them, the emotional control to act while others panic. If you have those 3 things, you'll be ahead of 95% of investors. Let me paint the picture. Imagine this moment. The market has fallen 45%. Your watch list, the one you built months ago, is lit up with green alerts. Company X down 38%, fair value reached. Company Y down 47%, high probability by zone. Company Z down 52%, undervalued based on cash flow. You're executing your plan. You're rebuying shares in companies with low debt-strong cash flow, proven profitability, competitive advantage, long-term demand. And the best part, you're buying them at discounts people will dream about years later. This is how you buy the next Google at 2008 prices, the next Tesla at 2020 crash prices, the next Amazon at .com crash prices. History doesn't repeat, but it does rhyme. And the rhyme is always the same. Crash gives panic, gives opportunities, gives wealth. Why most people miss their moment here. The uncomfortable truth. Most people fail to get rich from crises for one simple reason. They arrive unprepared. They don't have cache plana, watchlist risk management, emotional discipline. They wait for the crash and then try to think. But you can't think clearly inside fear. That's why preparation is everything. Because when panic starts, it's too late to learn how to stay calm. The 2026 crash might be the best opportunity of your lifetime. Look at where we are. Overvalued market-side-driven hype cycles, record corporate debt slowing global growth, fragile supply chains, central bank exhaustions, geopolitical pressure, consumer debt at highs. We are standing on the edge of a historic setup. And here, the ironic part, most investors are blind to it because things still look good on the surface, but not for long. The question now isn't, will there be a crash? It's, will you be positioned to act when it arrives? Now that you understand the setup, now that you see how the dominoes fall, now that you know how panic turns into opportunity, let's talk about you, not institutions, not hedge funds, not billionaires. You, the individual trying to build real wealth in a world that feels increasingly unstable. Because here's the truth, in 2026, there will be two types of people, those who freeze and those who rise. The difference won't be luck. It won't be timing. It won't be insider connections. It will be preparation and the courage to execute. So let us break down the exact strategy that can position you to come out of the 2026 crash, not just untouched, but transformed. Hook, the future belongs to those who prepare. History is brutally consistent. In every major crash, 2000 tech bubble, 2008, housing crisis 2020, pandemic panic 2022, rate shock 2024, AI mania, correction, a tiny minority of people used the chaos to build fortunes that reshaped their lives. They didn't wait for the perfect moment. They didn't try to guess the bottom. They didn't panic. They prepared. And the ones who didn't, they spent years trying to recover what they lost in a weekend. 2026 will be no different. The three foundations of crisis, WALTH2, turn a crash into a wealth engine. You only need three pillars. 3. Not 10, not 20. 3. 1. Liquidity, dry powder. Wins wars. The number one mistake people make during a crash is simple. They have no cash. They're fully invested, fully levered, fully exposed. When prices fall 40 to 60%, they can't buy opportunities because they are the opportunity trapped in losses. Before volatility hits, of 10 to 15 high-quality companies, 3 to 5 real estate opportunities, 5 to 7 undervalued sectors, 2 -3 alternative assets, because nobody can be, diversification rules never go all-in on one idea. Spread risk across quality, equitious bonds, real esteteco medistrist credit, cash reserve. C. Emotional protection. This might be the most important. Turn off daily news. Stop checking your portfolio every hour. Follow your plan, not your fear. Your future self will thank you. A realistic 2026 wealth. Sienna Rollins, play out how this could actually look. The crash hits, your watch list lights up. Prices fall into your predetermined entry zones. You start accumulating. Blue chip companies down 40%. Real estate forced sales down 25 to 35%. Distressed bonds paying 10 to 15%. Undervalued sectors like energy, industrials, and healthcare. Gold as a hedgy betting down. AI companies with real fundamentals you hold. Not for weeks, not for months, for years, until valuations normalize, markets recover, and people start saying, I wish I had bought back then. Everything was so cheap. The recovery where the real wealth arrives. Recovery is slow at first. The media calls it uncertain. Analysts remain skeptical. Retail investors still lick their wounds. But gradually, earnings stabilize credit markets. Thaw confidence, returns liquidity, improves the institutional flows. Comeback index funds start climbing again into that S when your early moves begin compounding. What you bought for $40 climbs to $6,565, climbs to $9,292, climbs to $140. Real estate rebounds, bonds pay out. Quality stocks explode higher. Within 3 to 5 years, your crisis portfolio could double or triple, purely because you acted when others didn't. The mindset, courage when it counts. Here's the part nobody tells you. You won't feel brave during the crash. You won't feel smart. You won't feel confident. You'll feel doubt, uncertainty, fear, discomfort, and that's what creates the opportunity. If it felt easy, everyone would do it, and there would be no opportunity left. The crash rewards the few because the few take action. When it's hardest, your edge isn't intelligence. It's courage. It's discipline. It's your ability to stick to a plan. While the world trembles, the final message, your defining moment, is coming. Whether the 2026 crash becomes a three-a-Torah turning point depends on what you do before it arrives. Right now, while markets still look stable, is your moment to prepare. Build liquidity, build a watch list, build a crisis plan, build a resilient mindset, because when the crash hits, the window will be small. Fear will strike fast, opportunities will appear suddenly, and disappear just as quickly. You don't need to predict the crash, you need to be ready for it. The world is about to enter a storm, but storms don't just destroy, they uncover gold buried beneath the surface. When 2026 arrives, decide who you'll be, one of the millions trying to survive, or one of the few who rise. The crash could be your greatest setback, or the moment that makes you rich. The choice begins now.